In this week's episode of the Stockscores Market Minutes, I'm going to talk about a really important topic for traders who wonder, when is it time to sell? When is it time to take the loss? And the implications for risk management. Plus, I will do my analysis of the stock markets, the Bitcoin market, gold, oil. We will do a look at the day trade of the week on MT, and we'll run a Stockscores market scan in search of longer term trading opportunities, all coming up. All right, so one of the most basic concepts for traders to learn is to know when to sell. And of course, we have the profitable sell point. But what I want to talk about today is where you sell at a loss and how to gauge the risk of a trade. You know, we've seen people chase stocks like GameStop and AMC higher, and they took on a lot of risk. And I don't know that people really understood how much risk they were taking. And there's a really simple way to understand this, and it comes down to the trading patterns on a stock chart. If a stock has been trading in a sideways range, let's say between $9 and $10, and perhaps it's been in that range for a week, or perhaps it's been in that range for 4 or 5 months, doesn't matter. If it's in a sideways range with not a lot of volatility in price, it's quiet and just sort of going sideways, then what the market's telling us is that investors believe that based on all fundamental information, that range price is what the stock is worth. So if it's between $9 and $10, then investors are saying, okay, based on all the information we have, this stock is worth somewhere between $9 and $10. Well, if a stock then breaks out of that range, it implies that there's some new information that justifies people to pay a higher price. So if one day the stock jumps to $11, why would people be willing to pay $11 for a stock when for the previous few months they weren't willing to pay more than 10 or take less than 9? And the reason is that there's some new information that justified that. And if that new information is good news and it's valid, then as more and more people learn about that information, the stock is going to go into an upward trend. And that's how we make money. That's one of the fundamental ideas behind the Stockscores approach to picking stocks. But if that information was not correct, and the market does make mistakes, if it was a rumor that turned out to not be true, then we would expect the stock to fall back into the range that it was in before the breakout. And so your risk management would say if you're buying that stock at $11 because it's breaking out, then the risk is that it may fall back into that range of $9 to $10 if the information is wrong. But what if you buy it 5 days after the breakout, and by that time it's now $15? Well, the risk is still all the way down to the $9 to $10 range, because that was the price floor that the stock had before it came alive, before there was some new information to justify the breakout. And so when you chase stocks higher, when you buy stocks that are well into their upward trend, you need to recognize that the distance down to support is much farther than if you buy them on the first day of the trend. And so when we're buying stocks, we should always look to see where support is. Where is that lower boundary of where the stock has been trading recently? Now, it makes a little more sense if we look at some charts. So let's do that. All right, so let's jump over to the chart of PRQR, and you can see here that the stock was in a sideways range right in here. So that tells us that based on all available information, the buyers and sellers had some agreement about what this stock is worth. It wasn't really more than $6, not a whole lot less than $5.50. Then the stock comes alive. There's the action candle, and that means that there was abnormal price and abnormal volume. That is a signal that there's some new information coming in here. If you buy then, your distance down to support, where your loss would be taken, is about that much, about $1 a share. If, however, you wait and the stock goes up, 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 and you're chasing it way up into here, well, now your distance down to that floor is much greater. It's more like $4 a share. And so the danger of chasing stocks higher is that you end up getting them in a much riskier situation. When you buy stocks, you want to think, where was the last floor? And then use that to manage your risk. Now, if we jump to a longer term trade setup, this is the trade on GME. And you can see that GME coming into last year was quiet in a sideways range. And then it came alive. There's the action candle, the abnormal volume, the abnormal price action. Okay, so if you're buying there, that's your risk. But many people were buying up in here. The stock was trading huge volume. And if the story, the rumor is false, the distance down to the floor is much, much greater. And look what happened. When the bubble burst, it went all the way down to that old floor. And so that is what you want to avoid. You don't want to chase stocks that are well into their upward trend because you are so far away from support. Now, more recently, it got quiet again, and then it broke. All right, it's breaking from a new floor. So that was the risk. If you're buying up here a few weeks later, now you've got that much more risk. So always think about risk reward. Where is the last floor? Those are the things that are going to help you manage risk better and know where to exit if a trade doesn't work. All right, let's get into this week's market analysis, starting off with the U.S. markets. We had an interesting week. The market has been sort of grinding its way lower, and we had, this sort of situation where the market moves away from the trend line, comes back, moves away, comes back, oversold when it's far below the trend line, came back and actually broke the downward trend line, this on the short-term basis, broke the downward trend line Friday morning. And then at the end of the day on Friday, there was this spike higher, but volume is really light. So I wouldn't read too much into that spike higher. It is coming up into resistance. I think we may see a little bit of a pullback next week just because that rally at the end of the day on Friday was a little bit artificial. So we'll have to watch that. It's interesting. But the good news is the long-term chart remains in an upward trend. And so while the market's been sort of lacking enthusiasm the last few weeks, we've been generally going sideways for about 6 weeks, it is still in that longer-term upward trend and building a base for the next leg up. As long as the upward trend line isn't broken, things are looking pretty good. On the NASDAQ 100, also had a little jump on Friday, but this is still below its downward trend line. Good news is that it's building a rising bottom, so if it could break out through that, that would be a good thing, but it's got work to do there. The Russell 2000 rebounded from being oversold, so there is your downward trend line. We were far below it on Thursday morning. We're coming back, but we still haven't broken the downward trend line, so there's still going to be hesitancy among those who like to trade the small cap stocks, which generally are retail traders. I always refer to the Russell 2000 as the retail trader index because it represents what those smaller home-based traders are focused on. They tend to focus on the lower price stocks. All right, moving along to the Canadian markets now. And we see the TSX also had that little rally at the end of the day, breaking the downward trend line from a rising bottom. Chart-wise, it looks good, but the lack of volume makes me question whether it's real or not. We'll see next week. The longer-term chart, nice upward trend, so no problem there. Looking at the TSX Venture, we've got an upward trend line right here, falling top, starting to break that upward trend line, so that's a bit worrisome for those microcap stocks in Canada. Currencies, US dollar starting to turn around, starting to get bullish. We had the downward trend line broken, building rising bottom, starting to move higher. Going to face a fair bit of resistance here, so I don't think this is going to be a quick move higher, if at all, but it is looking better than it was, say, a couple of months ago. On the Bitcoin market, interesting chart because here's the upward trend line. We're kind of bouncing around right at the trend line right now. My concern is that there's a falling top here. And so if we were to break this upward trend line from the falling top, then I think we could see more selling pressure in Bitcoin. Hasn't happened yet. For now, it's kind of a pennant pattern. And if we could break out through the top of the pennant, that would be okay. But again, lots of things to watch for. Right now, I would be cautiously optimistic with Bitcoin. On to commodities, and here is a chart of gold, which is, as I've said the last few weeks, hanging out right at support at the upward trend line. If this breaks down through it, it's going to be bad news for the gold bugs. If it could break the downward trend line, well, that would be good news. Hasn't done either. So right now I'm sort of neutral to bearish on gold. Oil had a couple weeks of selling pressure, but managed to come back nicely this past week from some weakness. During the week it was below. It came back to be above the trend line. So we'll see if it can continue to hold that, but I would say that oil is still okay longer term. And then finally the fear chart. Fear is at a low. You can see that there. So my ratings then: bullish on both time frames for US and Canadian stocks, neutral in the short term. Gold neutral on both time frames. That is an upgrade. I've upgraded it in the short term from bearish to neutral. And oil bullish long term and neutral short term. Buyers are still showing a lack of motivation, and after some recent profit taking, there are some signs of stability, but there's work to be done. So be very selective with stocks until chart patterns start to improve. We need some stability to come back. We need some enthusiasm among the buyers to come back. Gold is stabilizing, but it has work to do, and oil is going through some short-term profit taking, but that long-term trend remains up. Fear is relatively low. All right, now let's jump to the day trade of the week, always an example of what we do with the Active Live service. If you have an interest in learning my approach to day trading, swing trading, position trading, those things are all discussed on the Stockscores website under Trader Training. I will be starting a mentorship program probably in May. So if you have an interest in joining that, there's a little bit of information on the website as well, but fire an email to me or leave a comment on the Stockscores website that you want to be updated on that, and I can send you an email once we've decided on it. I only do 20 students for the mentorship program, and it tends to fill up very quickly. So it's something to keep an eye out for. We'll announce that soon. So day trade of the week is an action candle from low volatility. You can see the action candle there, the spike of volume, the spike in price from stability. And this stock had a nice run higher. Here's how the economics work. For every $100 of risk, you would buy 500 shares. It's a little bit larger trade, $13,500, but remember, if you desire, you can leverage that 3-to-1. That means the capital required was $4,511. It ultimately earned 9 times risk, so that meant a $900 gain on that $4,500 of capital, which was a 20% return. Pretty good for a one-day hold on a relatively quiet trading day on Friday. Well, now we're going to jump over to the Stockscores market scan and take a look at that tool to see if we can find some of those longer-term trading opportunities. So we'll flip over to the market scan now. And I always like to run the abnormal break scan. We're going to run it on the US side. This scan looks for stocks making abnormal breaks to the upside with abnormal volume, and then we inspect the charts to see if they have good chart patterns. Now here is one where I can see the abnormal volume, the abnormal price. However, it is still below this resistance level, and it's not really breaking from low volatility. It was pretty choppy of late, and that lowers the quality. So although there's some action there that is interesting, I don't think it's really a great chart pattern, so I move on. Now these are the sort of skills that I can teach you so that you can run these market scans, know what to look for in these charts. You know, when we run a scan on a daily basis, I might go 2 weeks without seeing anything I really like, and then I might find 4 stocks in one day that I like. It's a great tool because it allows you to search all of the North American markets, Canadian and US, and find those stocks that are coming alive from those low volatility sideways trading patterns before anyone else catches them. Here's a stock that's obviously doing well, but where's the floor? You know, the last floor is maybe here, so the risk reward isn't good, but you know, really this stock started its move higher way back there. That's when you wanted to consider it, and that's when the Stockscores indicators went up above 60 and 80, telling us that the buyers were getting aggressive with this stock. So for now, it's a hold. It's not really something I would consider buying here. So this is what I do every day. Usually in the last half an hour of the day, run these scans, look for opportunities that I can enter before the close. And then typically this particular strategy, we're looking for position trades, which means we're buying stocks to hold for weeks or months. They're not day trades or swing trades, but longer term trades, kind of thing that you might do in your retirement portfolio. It takes, well, once you're good at it, maybe 15 minutes a week, or pardon me, a day. When you first start out, it takes a little longer to do these market scans. You can see that I'm scrolling through these charts very quickly. I know very specifically what I'm looking for. It's sort of, this is a good example. Here you have a stock that had resistance like this, has rising bottoms, which is optimism, and it was breaking out right there. So your entry point here, your stop loss down there. Now to buy it up here, your distance down to that support is too far. That's why we don't want to chase it here. But if you're in this, it's a good hold. Really, the buy signal was a few weeks ago. Anyway, that's a little example of what we do with the Stockscores market scan tool. Hope you've enjoyed it. If so, please leave a comment, a like, subscribe, all that good stuff. We'll see you next week. Trade well.